First of all, that this event is being recorded. So please ensure that all participants and attendees display your name correctly. Ensure that you have your first name, second name, and the name of your organization as well. This is to help, with all administrative purposes. To do this, just click on participants in the menu, hover over to yourself, and then click more, and then rename. Also, attendee microphones are muted. However, the host will unmute you if you are called upon to speak. If you do have any questions from the various addresses and the panel discussions, please submit your questions using the chat function at the bottom center of your screen. The moderator will then respond to we'll respond to them during the Q&A. And if you have any technical issues, please use the chat function as well, messaging SA Iponwoba. Now, that said, I will hand over for the opening remarks, which will be given by the Economic Counselor for the Deputy High Commission of the UK, Mr. Guy Harrison.
Sally, good morning, and good morning, ladies and gentlemen. I hope that everybody can hear me. Can I just check?
We can hear you, Guy, loud and clear.
Okay, that's brilliant. So let's press on. And it gives me particular pleasure to be here to help launch, or should I say relaunch, the Climate Finance Accelerator program in Nigeria. The UK government is glad to be in a position to resume work, which we had started working with quite a few colleagues whose names I recognise as joining this morning's workshop as a pilot project back in 2019 in Nigeria. And it is, as our host has already mentioned, I think a particularly timely point. 4 weeks ago, Nigeria published its nationally determined contributions. The level of ambition is admirable and welcome, but I think all of us joining this call this morning will know how much there is to do, particularly to attract the investment essential for delivering the commitments. We know the money is there, the finance is there, and it was certainly flattering that the NDC also referred to the Climate Finance Accelerator, and we want to play, and the CFA wants to play a role in mobilising and facilitating private sector finance. With an estimated cost of up to $177 billion to deliver the NDCs, we know that public money alone cannot do the job. What we need is the best possible optimal partnership between the public sector, between government, which definitely has a role to play, between development financial institutions and the private sector. The Climate Finance Accelerator is part of the UK's global efforts to take action at the right scale this decade by providing practical ways to enable partner countries to finance and deliver their NDCs. It takes place in Nigeria alongside a portfolio of other UK government-funded programs, including Solar Nigeria and including the Partnering Accelerated Climate Transition. The UK government has also been supporting capacity building and technical advice within the federal government, notably in the an advisor in the Ministry of Environment and the Ministry of Finance to provide support and advice on climate finance. So an important part of today's workshop is not only to address what is constraining the delivery of bankable renewables projects and how to help match up project developers with finance, but also to hear your views on what kind of model would work best for the CFA in Nigeria. We aim to see the CFA acting as a convener, as a facilitator, and to encourage public-private collaboration. We wanted to bring together project developers such as yourselves and those who might potentially finance projects or change the system so that we have the right policy environment that enables that climate finance to flow more easily. A core principle of the CFA is that it is locally owned and driven. We recognise that the routes to success differ across the countries we are working in, and that the support provided through the CFA must adapt to Nigerian needs. The High Commission and Deputy High Commission are delighted to be working with our partners, the Nigeria Economic Summit Group, alongside Adam Smith International and the global program manager, PricewaterhouseCoopers. I also want to acknowledge the contributions of Ricardo, who also played a role in helping to draft the NDC, and Ian Callaghan, without whom this program would simply be a speck of the imagination. This will also ensure access, of course, to the expertise of finance and private sector finance based in the United Kingdom. Success from today's workshop will be getting your views on how to expand that pipeline of finance and increase the number of bankable projects. This is very much a joint venture with project developers, with the financial sector, and indeed with government, both federal but also state level. So we're very much looking forward to hearing views and to hearing what our panelists and audience have to say. So without further ado, I'm very pleased to turn to Olumide Lala, and thank you very much. And I look forward to hearing a good conversation this morning. Over.
Thank you, Mr. Harrison. I believe Mr. Lala is yet to join. So we will take some initial comments from the project director for the Climate Finance Accelerator Nigeria, Nick Haslam. Nick?
Good morning, Sele, and good morning to our audience. Thank you very much for joining, and thank you, Guy, for giving that introduction. If I can just ask the NESG holding the slides to go back one or two. So I think that one forward. There we go. What the CFA can do for you. I'd just like to leave this slide up for a moment while I explain a little bit about how this workshop is going to fit into the later stages of the Climate Finance Accelerator in Nigeria. As Guy explained, this is a tangible initiative. It's intended to connect projects to finance. And this might be at the early stage of accessing finance, grants, venture capital, and so on, or it might be a much later stage when established businesses are seeking to access private debt markets, issue green bonds, and what have you. So all the full spectrum. We are intending to set up an institution, a body in Nigeria, which can be this hub, be a portal for all market actors to participate in, to access the information, to receive advice. We will convene and continue that, like in this workshop, gather different segments of the market together on the demand side, on the supply side, to convene and make sure that that necessary information, the technical support, and the ability to complete transactions is there. So over the coming 3 or 4 months, we'll continue to have discussions with some of you individually. We will then be laying out a business plan for the Climate Finance Accelerator, and we will be presenting that to various market actors for their views, to make sure that we really are providing you with what's needed to catalyze investment. And then after COP26 in Glasgow in the UK in early November, we will be beginning to launch it as an entity that's accessible to the markets and to public sector stakeholders as well, with the idea of it being active for use come early 2022. That's the rough process, and as Guy iterated, we would like you, as well as explaining how you have found accessing finance if you're a project developer, or how you are contributing to promote climate finance if you are a DFI or some sort of sponsor of projects like Rural Electrification Agency. We would like to hear how the CFA should be designed for you. I will now just see, has Olumide joined us? Sele? If not, I'm happy to cover his part of the presentation.
I don't think he's joined us yet, Nick. No, he's not on.
He may be having technical issues, so so I'm happy to cover his part of the presentation, and then we can move on to the panel discussions.
Please carry on, Nick. Thank you.
Can we move forward a couple of slides then, please? So I think I'd just like to explain here the different elements of the climate finance supply chain as we've understood it. Now, this is a supply chain. This is about project developers, SMEs, moving from one stage of the early stage of development and financing through to that much later one, you know, the refinancing structured debt as in this presentation. And in our understanding in Nigeria, from conversations, from desk-based analysis, and this builds on the work of the Climate Finance Accelerator since 2017, in which as Guy mentioned, Ricardo and PwC have been active. This builds on the work of that. The finance sector is sophisticated and substantially involved in different elements of the climate finance supply chain, but there's a connectivity gap, and that the challenge is to enable some of the actors in the supply chain to engage most fully with project developers. So, for example, commercial banks being able to deliver loans that are suitable to the SMEs that are there. Commercial banks, very active in Nigeria, lots of skills, increasing interest in climate finance, but enabling them, facilitating them to offer finance in the right way, in a suitable way that suits the project developers is the critical function. And that is where I think the Climate Finance Accelerator is going to be most of use. Mr. Olumide Lala, who's our lead climate finance advisor, has now joined, so I'm going to pass over to him and he will continue from this point. Olumide, over to you.
Good morning, Nick, and my apologies to everyone. I've had some technical issues joining, and once again, also apologies for my voice. I've had a bit of a cold as well, so I guess I'm not having a very good start, but I will try and address this as best as I can. I hope my voice is coming out rather clearly to everyone. So Nick was just trying to explain to you, and thanks very much, Nick, was trying to explain to you effectively the climate finance infrastructure and landscape in Nigeria as we see it. The best way to start this conversation, obviously, is to just look at projects itself and how they are constructed. Typically, projects fall into about 4 different constructs, as it were. You know, where you have the project initiation side, where this is actually identified, what's the right project to do, what sort of assets are we trying to finance, what is it that the project is trying to deliver, whether it's by virtue of a service, impact, as the case may be. But one of the things we need to obviously appreciate that for you to act as climate finance, there's certain criteria that a project has to meet. And in the identification phase of the project, we ensure that through the evaluation and selection processes, as it were, these criteria are very visible and identified in those projects. And of course, the project then moves into project development. Now, between these 2 phases, typically you have grants, technical assistance, personal equity, the owner's equity in the business. And in some cases, you might be able to access concessional financing from DFIs and the likes, just to ensure that we smoothen the process of getting the project off the ground. Now, this is available to all projects that we consider bankable and are able to meet certain criteria. As you move forward, then obviously the project or the business is built up. Now, we're speaking about project financing here. So these are projects specifically as opposed to the company. Now, when you look at the projects that you're looking to finance, essentially we need to look at the company itself, because obviously there's a credit risk associated with company. But here we're looking more at project finance. So I haven't gone through the basics of the company itself. Now we need to look at the integrity of the project itself. Is this project feasible? Is it sustainable? And it's something that will deliver the impact that we're looking to achieve, or even the service that we're looking for. So at this point, that you need to expand a bit, and of course you need financing from other financial institutions such as banks at market rates, and in some cases the banks might require of you guarantees just to soften and de-risk the project itself. Now, clearly, once you've gotten going and you're now in a full operational phase, and you're able to demonstrate 3-4 years history of good marketplace returns, it is possible to refinance your positions, and that is obviously your debt that you've taken on, either in two ways. If you've taken on debt, for instance, from a friendly participant, they might decide, that we'll convert that to equity, which is good for you, because now obviously you have a share, you've got financing at near enough zero fees. Obviously, the downside of that is that you've given up a part of your business. But typically what tends to happen is that you finance your position now that your project is now relatively more stable and the risk associated with it is a lot less. Then of course you're able to refinance it for a better rate through other means, or in some cases raise a bond in the market. Now, who are the participants and those who are involved on this side? Now, as I won't go through all of this, but just as a quick note, you will look at, you've got angel investors in the first phase. These are people who are looking to assist you with your project. They're there to assist you with your project initially, and I'm sorry, I'm having to use my phone because my computer wasn't working. So, in some cases, you get some grants from places like the World Bank, but as you move into your project development phase, you have some entities that would obviously provide you more concessional financing, as I said earlier, through DFIs and the like. But where we sit today and the area of focus is actually around your project finance, where obviously you begin to access more international type grants and as well as technical assistance, but more importantly, accessing banking facilities from our commercial banks at some sort of rates that are somewhat concessional because some guarantees have been applied. Obviously, when we start coming to the point of refinances, then at that point we begin to aggregate our positions and subsequently try to get more flow into the system from the banking sector, from the capital markets. But for this purpose, we'll focus on the banks themselves, who are very keen to get into certain sectors, especially the energy sector, in some cases the transport sector, and some agriculture sector as well. You'll find some of the banks, and I don't want to name any of them because they're all able to provide you with services and facilities. If we go just to the next slide, there's a slide that I have here that just paints you a picture about how everything connects to each other. So what we're trying to propose here is a climate finance accelerator model, if you will, where local development finance institutions such as the Development Bank of Nigeria and the Bank of Industry are able to provide you with low cost and long-term financing. Because what you tend to have, unfortunately, is that the banks lend short-term whilst your project needs long-term financing. So what we're trying to do is how do you basically match the risk as well as the tenor of your loans. So if we get development banks providing financing to you through the commercial banks, what that does is that because the commercial banks are taking on the risk, they will have to ensure your projects are bankable. And we obviously are here to help you with some assistance to ensure that's done. Now, that could also be aided with some foreign investment, low-cost foreign investment, which basically is also channeled through the local banks and lent onto the project developer. Once the project developer gets it, obviously we got some guarantees. Foreign sometimes. Now we're lucky that we have the Development Bank has created a new company called the Impact Capital Guarantee Fund company, which is able to provide guarantees to the bank to de-risk this project that we spoke about earlier. And where some of these projects can be identified as green or have environmental or climate or social benefits, then we could basically aggregate some of this and try to list that on the market and create more opportunities for financing. all told, this is something that we have been working on for some time. At this point, before I just jump off, I think it's only in order that I speak to a few people, for instance, who have been part of this journey since inception way back in 2018. And these are people who have contributed to this. And these are people you can reach out to if you need more information. We've got our engagement manager called James O'Kay. Antonia Oko has been our technical project coordinator. Nick, who was just on trying to fill in for me. Nick Aslam is our project director. Uzo Obweche, Tunde Arogumati, and has been very instrumental in all of this. Uzo and Tunde have been in this journey since 2017, and some of you remember them from the time out in 2019 when we ran the first workshop. Darius is a gentleman who's providing some good financial advice to us from the States. Blanca and Federica, obviously part of the core team. These are people that you can reach out to at any point to assist with a lot of the stuff that we're doing. And if you need any information, we're always there to help you. I know it's a bit rushed, but when you go back and look at some of the slides, if you need to reach out to any of us, we'll be too glad to help you. I think I'll yield the floor back to the moderator now. Thank you very much for your time, and I wish you good deliberations over the panel discussions. Have a good day. Thank you.
Thank you very much, Olumide. I think your comments there give us a great understanding, or at least an overview of the climate finance space, what is being done right now in Nigeria, and it leads us quite nicely into the panel discussions that we're going to be holding now. I think what will be interesting to know, and maybe we'll save this for the Q&A, is what sort of projects specifically are being invested or funded at the moment, and that'll be useful information for our attendees and viewers. But we'll park all of that for the Q&A. Now, launching straight into the panel discussions, we have two panel discussions. Like I mentioned earlier, we're sort of unpacking everything across the value chain of climate finance from two ends. Those who sort of supply or provide the funding, make available that project funding into the climate space. So we're talking about incubators, DFIs, other finance sponsors. And then the second panel, we'll want to hear from the viewpoint of project proponents, your developers, and your operators in the space. So without further ado, I will quickly introduce the panelists for the first discussion. I implore all panelists to stick to the time allocated of 5 minutes. I will be quite firm as we have to keep the time, and I will prompt you or nudge you when you have 30 seconds remaining of your allotted time. The first of our speakers is Mrs. Ijoma Ozulumba. She's the Executive Director for Finance and Corporate Services of the Development Bank of Nigeria. We have Mr. Eluma Obibuaku, Vice President, Power, Africa Finance Corporation. Mr. Barker Saju, he's the Executive Director, Technical Services at the Rural Electrification Agency. And Mr. Bankole Olorutoba, CEO for the Nigeria Climate Innovation Center. So turning first to you, Ms. Ijoma Ozulumba, if you could just, in your 5-minute slot, give us a sense of your role, your work at the Development Bank of Nigeria, and help us in addressing what the barriers to increasing access to finance are. How well informed are the borrowers in responding to climate or green finance? Over to you.
All right, thank you. Good morning, everyone. Just to thank you for the invitation to the panel. Thank you for the organizers and for all the good work that you're doing in the space. I think just to give a bit of a background about the Development Bank of Nigeria, this is an entity that started in 2017, set up by the federal government with a consortium of development partners such as the World Bank, the KfW, that's the French, the German Development Bank, the French Development Agency, as well as some other parties. And the whole idea is to increase access to finance for small businesses in Nigeria. Of course, the case has been made for small businesses and how we have 41 million small businesses and how access to finance has been an issue. So this is right where, what kind of led to the creation of the Development Bank of Nigeria. Now, over the last 4 years, or almost 5 years now, we've stayed true to our threefold mandate, which is loans, guarantees, and capacity building. And in the last, so since inception, we've lent about 400 billion naira to about 160,000 SMEs. So that's kind of the scorecard that we have from inception to date. And also we've provided guarantees. Olumide did mention our wholly owned subsidiary, Impact Credit Guarantee Limited, which was set up in 2019 to also provide guarantees to enable the banks, kind of increase the appetite of the banks to lend. So that company has right now written about 15 billion naira of guarantees and on the upswing because it's a new entity and right now taking off. And that's the amount of guarantees that have been written into the space. This is an entity that's set up with the highest degree of corporate governance with an independent board. And some of the development partners also sit on the board of DBN and observe, some as observers and some as shareholders and full members. And also 4 years of profitability right from inception, 0 non-performing loans, the highest level of attaining to financial sustainability and risk management. So that's DBN in a nutshell. Going right down to the green conversation as it affects DBN now, from the core values, one of our core values is sustainability and being set up as a DFI in Nigeria and a new DFI. This was also one of the key pillars of the strategy where we're going to intervene into the space, but also looking at how we can affect the conversation in terms of climate change and reducing emissions and enabling SMEs to also put forward adaptation measures to combat the impact of climate change on their businesses. So this is a very key area for us. Sustainability is one of our core values. From going on from there, we've developed then a green strategy. So this is what the framework that we use to look at whatever we're doing in the green space and what our vision is and what we need to do in terms of implementation. And then following from there, we've developed a number of green products. Of course, in developing the green strategy, we spoke to a number of our banks. As a wholesale development finance institution, we deal directly, not with the end borrowers, but directly with the banks. So we make funding available to the banks. And the guarantees that we do are also to banks, and technical assistance we also provide to banks. For instance, in technical assistance, we've engaged the Frankfurt School of Finance, and we've selected 5 banks within Nigeria, and we provide technical assistance, therefore, to those banks. And a lot of it also, there is a segment on how these banks can begin to intervene in the green space and also develop green products.
So Zulumba, sorry to interject. You have just under a minute left.
Okay.
So if you could wrap
All right,
up very
thank
quickly.
you. So I was talking about the green strategy and our green products and how we also train banks on green finance. And another thing that we've done is we've set up a green credit line with the KFW. So this is a fund that is also available for lending into the green space. We're also in the process of becoming an accredited agent of the Green Climate Fund. This is also an international fund of making funding available. I'm happy Rural Electrification Agency is also on the call. 2 weeks ago, we signed an MOU with the REA to finance about 1,000 solar mini grids. So that's also what we're doing. I think in a nutshell, so that I don't use most all the time, it's just this is just a summary of how we've been able to intervene in the space, and of course looking to do much more, and also collaborating with the CFA and other players in this space. Thank you.
Thank you very much, Mrs. Ozulumba. Very insightful learning about how DBN is pulling together stakeholders in the space, also coordinating and hearing the pain points of the SMEs whilst reaching out to the various financiers to make that funding available. I'm sure there'll be more to unpack through the Q&A session afterwards. Moving next to Mr. Eluma Obibuaku, the VP of Power at Africa Finance Corporation. So if you could tell us, AFC has been involved, right, in raising finance for multiple projects, including a greenfield IPP. In your experience, what would you see as the critical barriers to accessing climate funds? And please keep again to 5 minutes. Thank you very much.
Thank you. Good morning, all. I'll first of all just very quickly introduce AFC in terms of who we are, and then speak to the items to the barriers that you mentioned. AFC is an infrastructure bank. We've been operating for about 10 years, and we operate throughout the length and breadth of Africa, essentially from Cape to Cairo. And we finance much in the range of infrastructure, but specifically my responsibilities fall around power. And within power, we are looking essentially everywhere in the value chain, in the electricity value chain. And the focus in terms of products really is limited recourse project finance, and that would be debt, that would be equity, and that would be mezzanine type instruments. Our sweet spot, to be honest, would be grid scale type financing, and it would be financing essentially for projects on the generation side. For example, it would be for projects that run from 50 megawatts and up. Typically, we are one of the financiers, and we offer primarily FX for acquisition of equipment and related items to actually bring a project to birth. I think Olumide made a very good sketch of the various stages to prepare a project and then get it to be both technically, financially viable. And of course, one of our core elements is environmental stewardship. And within that, green financing. We're accredited with the Global Climate Fund, as mentioned earlier. Now, specifically with respect to Nigeria, there are a number of barriers that have unfortunately been sustained for a while. And as I said, these barriers within the grid space really the most important. They're in stages, and of course our work is to try to identify risk, allocate risk to the parties best able to bear these risks, and then directly mitigate risks where possible. But in terms of the key barriers themselves, one of the issues that one has seen, for example, is that the primary off-taker in Nigeria of much of your grid electricity today is the Nigerian Bulk Electricity Trading Company, or NBET. Unfortunately, at this point, because of challenges within the value chain itself, NBET's ability to provide assurance for payment to electricity generators and the like is not where it should be. And therefore, that challenge trickles down and affects the bankability of individual projects that one may have that's looking to sell electricity to this institution, which is a primary institution that's able to buy the bulk amount of power that we can then finance and other financiers can finance. So that's one area. The second is in terms of the power purchase agreements in place, a number of agreements have actually been signed. Working out the issues within those agreements to ensure that that you can actually work your way to bankability and financeability and financial close has tended to be difficult. The net effect is, as we stand today, that I think in the past 3 or 4 years, and in fact beyond, I think the last project in this country that really achieved financial close, it wasn't necessarily a grid project, was somewhere in 2015, and that's been a while for a country that needs this sort of thing. So it's more an environmental, or what we call an exogenous factor to a lot of the project themselves than an endogenous factor.
Apologies, Mr. Iluma. You have just less than 1 minute left to round up.
Okay, will do. The other issues, which I'll mention very quickly, that are also of interests. There's been improvements, for example, in the tariffs. There's also, of course, FX issues that are of key importance to dollar lenders, euro lenders, etc. And you have to lend in these currencies in order to buy equipment that is required for these sorts of businesses. And then whoever it is has to earn money and be able to pay you back in the currency that you lend them. So this is not a trivial matter. That all of this said, we are in the business of trying to find ways to address these issues, to advocate with policymakers to ensure that the appropriate support is given to relevant institutions such as NBET, the Nigerian Electricity Regulatory Commission, and others, such that they can then create the enabling environment that would allow private financiers to come in, that would allow, where necessary, entities who can participate in the process of buying down risk, as it were, to also come in. But we're a little bit away from where we need to be. I thank you.
Thank you. Thank you very much, Mr. Iluma. It's clear that there are a number of barriers, as you say, whilst there's a lot of work being done to overcome these hurdles, there's still quite a long way to go. But I think this leads nicely to our next speaker. Good to have someone from the public sector point of view, from the government, being a part of this discussion. The Rural Electrification Agency has been very active in delivering electricity to households and businesses in Nigeria in the last 5 years, and also supporting developers and operators. So Mr. Barker Saju, thank you for being a part of this discussion. Can you enlighten us on how many mini grids have been commissioned thus far, and what exactly the key challenges that you have encountered in the process of these deployments from the perspective of the REA? You're welcome.
Thank you very much for having me. I'll just delve in quickly. The REA, as you know, is the implementation agency of government, primarily tasked as providing electrification for unserved and underserved communities. But it would be good to note that we are both project proponents and financiers. And essentially, our mandate is to promote electrification in the country, coordinate rural electrification programs, and then administer our Rural Electrification Fund, which is pretty much an impact fund. Under the Rural Electrification Fund, we've been able to deploy more than 10 mini grids in the last 3 or 4 years. And we have 30 more mini grids on board, working with the Development Bank of Nigeria, like the last speaker mentioned. And then essentially our approach towards electrification is diversified. We deploy solar home systems to various clusters, mini grids as well for healthcare and educational institutions, and then economic clusters. Essentially, these strategies are supported by a combination of funding options, including the national budget. And more recently, we have just launched a $550 million facility put together by the World Bank and the AFDB in terms of concessionary finance. I'd like to touch a bit on our experience in terms of mobilizing green funds. Under the inaugural issuance by the federal government for its green bond, in terms of the project portfolio, REA was a major proponent here, where we deployed 7 energizing education programs across 7 universities, totaling about 13 megawatts. These 13 megawatts contributed to meeting some of the NDC targets. In terms of challenges, I think, like the last speaker mentioned, there is the issue about currency volatility. There are issues around policy conflicts on the side of tax waivers and duties for renewable components, which actually limits the ability to de-risk these project pipelines. For our first set of 7 projects under the Energizing Education Program, we have actually had to struggle in terms of operationalizing our sustainability framework. But I think these are some of the top line challenges. In terms of opportunities, I think there is the real opportunity of leveraging on the national budget. However, it's important to recognize that there's a cumulative deficit in public financing for infrastructure across all sectors, especially for the energy space. And this actually provides an opportunity to ramp up sustainable infrastructure investments by leveraging private sector finance. I think there's also the opportunity for green tagging, where we could actually provide a lot of information on the available deals and have it centralized under one framework where people can actually be able to take a look at the pipeline of projects and what they have to offer in terms of returns, and then seize the opportunity to finance them. I think the key question for us here is, how can CFA support the REA? We are in the process of developing an environmental and social framework, where we would have like a holistic framework where we look at things from project design to financing on one platform. We will need some help here. There is also the conversation around a sustainability framework for these 7 projects that we've already deployed across the 7 universities. The approval we got for these projects, the 42 universities, actually had us finance 7 initially. And we've gotten the AFDB and the World Bank to also finance some, but there are 13 others that are still at early stage development, and we would need some help in actually putting them together. I think there's the need for internal capacity development so that we are better placed to be able to continue to develop more projects. I'd just like to close by touching on a recent facility that the Central Bank of Nigeria launched called the Solar Power Nigeria program. It's a 140 billion naira long-term concessionary finance for the upstream and downstream sector. Essentially, the upstream meaning manufacturing to stimulate local manufacturing and job creation. And then the downstream actually meaning those that go to deploy and distribute various renewable solutions. There have been a number of challenges in terms of accessing FX. What we've also seen is that developers struggle to put together bankable projects, and there's a need for a lot of hand-holding to this regard. I'll just pause here, and I'm happy to take questions during the Q&A session. Thank you.
Thank you very much, Mr. Saju. Very informative there, very crisp and clear in terms of the needs from the CFA, and it was good to hear earlier that an MOU is in place between REA and TFA. So to our last speaker then on the DFI Incubator and Sponsor panel, Mr. Bankole Oloritoba. You've been training project developers for over 3 years now. What is the context of your training? How would you assess the outcomes for beneficiaries of the NCIC capacity building over the years? And in your opinion, do they readily connect to finance? What challenges do they report back to you? You have 5 minutes. Please keep the time. Thank you.
All right. Okay. Thank you so much, Sele. And thank you for everyone who have been on the panel lately. I have seen, similar faces, and I'll be reading on similar names. So the NCIC, as some of you may be aware, has been in existence, since in 2018 when it was being launched with the vice president, by the vice president of Nigeria, alongside the World Bank, country director. And the whole essence of the NCIC is sort of to fashion out how to build an ecosystem around the growth of a green economy in Nigeria, leveraging on all the different challenges and the different, sort of innovations that are going to come up. So the NCIC over the years have been embarking on, a few programs focusing on venture development, which one of our flagship, incubation program is called, Embryo, and we do that with Allon, focusing on renewable energy, innovation. So the whole thought behind it is not just because I deliver, solar or off-grid mini services or mini off-grid services, but really because, again, I leverage on solar or renewable energy to be, to deploy some certain services. So for us, we always look at those innovation, that leverages on the core, technologies within the green or the climate space. And how do we sort of apply a more functional growth-enabled business model, on how they can grow. So our focuses for the past, 3 years have been around renewable energy, which we have run the energy, the renewable energy incubation program, with Allon. We have done also looking at how we can improve the use of SMEs and access to finance, which helped us to kick off a $1.3 million access to finance scheme with Providus Bank, which we sort of has a huge possibilities of opening up major markets for for SMEs playing in this space. Again, we also know that the circular economy that is emerging in Nigeria also is estimated to be about $300 million for Lagos alone, if we are able to achieve about 50% of of recycling happening in Lagos. But many of the challenges that we found whenever we we develop these businesses or the different projects that are that are playing within these spaces is access to resources from both the technology side of things and also the finance side of things. In our own bid to sort of build the ecosystem and find relatable information and surveys, business studies, we've embarked on a few other mapping surveys alongside Enterprise Development Center, which is where our office is based. And also, the Lagos Business School, School of Sustainability, also we're having a few, we've embarked on a few projects around, circularity and trying to help, circular businesses understand how to operate on a more, on a more functional scale. So for us, we know that around venture development, many of these sectors that we find on a, where the drawdown cash will happen to whenever funds like this have been mentioned, are always sort of traditionalist in their, in their model. So our part of our work is to see how we can sort of not remodel, but to sort of identify how we can improve the scalability of many of these traditional clusters. And so access to infrastructure is always a bigger, issue for many of them. If you look at the circularity sector, over 60% of what they do there are still manual, manual oriented. And so from all the different conversations we've had, with people at the different sectors, from metal or, ship scrap, salvaging units, which is also a huge niche market, to also the plastic, the plastic recycling, sector. What you keep finding that resounds along all those different teams of people is access to infrastructure financing. And when you do a cluster related kind of infrastructure financing, it gives them that chance, to be able to scale. We've had several talks, around the neighborhood with the ecosystem on how we can scale up, possibility within the scheme of things. But for the NCIC, for every time we do many of these trainings, which again, we have an early stage financing, method with All On, where we fund $10,000 to, to some of these businesses, every time they graduate within our space. And we've been doing that for the past 3 years. But after the $10,000, many of these businesses also need to scale, a little bit further. So where we have been able to ideally manage,
yes. Under 1 minute left.
Yes. So where we have been able to ideally manage some of these resources, we think that there's a whole niche opportunity for growth, scale business around, understanding the market and also scaling to meet, the kind of groups of people that they need. But we'd like to thank you for this time. And we think that access to finance and access to infrastructure also will be the basis of how we can scale many of the projects or the SMEs that we deal with within the green space. Thank you.
Thanks a lot, Bankole. I think you summarized it quite nicely there. Technology and finance, seeing how we can improve access to these resources for our early stage developers. So very quickly, we are far spent on time, and we will try to make up some of that time. I will again urge our next set of panelists to be concise in their delivery, and I will prompt you as I need to. So now we have the developers and the operators. It'll be interesting to see if they corroborate what Bankole has just shared with us, his perspectives. On our panel, we have Ms. Safia Aliyu. She's the General Manager for Society Renewable Energies. Ms. Hannah Kabir, the CEO for Creeds Energy. Mr. Shaninomi Eribo, he is the CEO for Green Square Meter, sorry. Mr. Wale Adebi, he's the CEO for WeCyclers, and Mr. Ikechukwu Ufoeze, CEO, Prime Commercial Farms. I like that we have a representation, a broad representation across various sectors: renewable energy, real estate, waste management, agriculture. So let's dive straight in with you, Ms. Safia Aliyu. You're welcome. You've been working with women to improve their sources of livelihoods and incomes for over a decade now. In many cases, however, there are reports that women need the approval of their husbands to raise finance, even though there's an abundance of evidence that women have better track records in loan repayments. As a leading social entrepreneur in this sector, how does your approach tackle this obstacle for access to finance for women in business and productive energy, as you give us an overview of society? You're welcome.
Okay, thank you very much. I hope you can hear me clearly.
Crystal clear.
All right. Good morning, everyone. My name is Safia Aliyu. I'm the General Manager at SOSE Renewable Energies. At SOSE, we afford households, organizations, communities, renewable energy solutions to their energy problem. either for cooking, lighting, or for productive use. And our main model is actually working with women to ensure that these technologies get to the core people who need it the most. So going straight to your question, you asked, how do we work with these women to ensure they have access to finance and then they are not limited by their husbands to be able to do the business as supposed? One thing you need, I would like to mention here is for women to actually succeed in whatever they are doing, the first thing you need to understand is the cultural background of where these women are coming from. So we understand that these women have cultural limitation of having to depend on their husband to do whatever they need to do. As such, well, the strategy we use is to ensure that we carry the men along. We work with the men before you're even able to speak to the women and have them work with you. The first thing we do is to talk to the men, that's the husbands of these women or whoever these women report to, and make them understand what we're bringing on board. And as such, they are then willing for their women to go out and work with us. And for us, it's been a very good strategy because it allows these women to lay down their guards and be able to work with us productively. They are able to go out of their ways to get things done because they understand they have the backing of the man of the house. There is no hindrance, no limitation as to what they need to do. And it's quite easy to work with women because for us, our project had to do with the distribution of stoves. We had to do the CDM project that had to distribute about 60,000 improved cook stoves in local communities in the country. And the users of this stove majorly are the women. So it was very easy to work with the women because they had firsthand information of how this technology needs to be used, of the benefit of this technology to them. But like I said earlier, we still carry the men along because this technology, most times it's purchased by the men for the women. So if you carry them along from the very beginning, they give these women the permission they need to do business and also to own the technology that we're preferring to them. So trying to be cautious of time, I believe this answered your question, but I'm still open to more questions during the question and answer.
Very grateful, Safia, for yielding some of your time. And at that, your response was very crisp, very informative, even if, you know, culture is something that we can't necessarily get through. Awareness to the end user, to the consumers, to that community helps to achieve your ultimate goal. And it's good to get inclusiveness from the husbands. Thank you very much. I'm sure there'll be more to discuss during the Q&A. So then we move on to Hannah Kabir, Creeds Energy. Hannah, as one of the pioneer beneficiaries to access to finance under the federal government of Nigeria program, you've now become a very successful entrepreneur in off-grid power project delivery. Would you say that access to finance has become easier? What are the particular barriers you have encountered as a leading female entrepreneur in this space?
Thank you, Saleh. Good morning to everyone. My name is Hannah Kabir. I'm CEO and founder of Creeds Energy. Creeds Energy is a professional solar energy services and solutions provider, enabling access to clean and energy efficient technologies for underserved and unserved households, businesses, and communities. We started out in 2012 from our application on the business plan competition, as you mentioned, by the federal government of Nigeria, you win. And that gave us the startup capital we needed, the startup grant we needed to test the waters, to understand the space, but also to decide on which part of the sector we wanted to participate. And in so doing, we have over the years found our space within the downstream sector, providing solar standalone solutions for SMEs. That's our main target for our Light Day project. We have raised since then more grant financing from Solar Nigeria program, consumer financing from Sterling Bank, blended financing from USADF and all on. And recently also we qualified on the NEP output-based financing by RIA and the World Bank. To answer your question on the challenges and the barriers also we faced in raising financing, I think it's best described as a hamster wheel. You get on one level and you get that financing, but you're already moving on to the next, trying to figure out and attract more funding to be able to reach your targets. For us, we decided that we wanted to address two problems, not just for ourselves as a service provider, but also for the micro enterprises that we provide solar systems to. So two of the challenges they face also are primarily around financing and power supply. So they tend to use a lot of their income on spending, recurring spending on fuel generators. And what our project Light Day is targeted at is to displace the use of fuel generators for micro enterprises by providing standard systems, standard solar systems that they could use during the daytime to carry out their productive activities. Through a lot of our research and findings, we've noticed that for the micro enterprises, they typically spend about 1,000 naira daily on fueling their generators. This is before the fuel prices went up, of course. And if we switch this to giving them a solar system that they pay on a lease to own basis, they end up spending about roughly 700 naira per day and a weekly repayment of about 2,000, 3,000 naira. So in essence, they're spending less. They're saving about 30% of their energy spend. They're contributing also to reducing the emissions from the use of fuel generators, but also they're able to scale and sometimes employ more people to work for them or open more branches. We're operational in about 10 locations at the moment. And basically our target is to power 1,500 SMEs every year, reducing the generator use or eliminating it totally by that amount, and also reducing the carbon emissions. So far, we have been able to power over 400 micro enterprises because we are also in the process of raising finance. We've been able to create about 52 jobs, and the repayment rates are quite impressive at about 76 to 80% with very little defaults. So what we've been able to do by addressing their own challenges is also helping the economy, because as most of the speakers have mentioned, SMEs are the backbone of the economy. Personally, I would say that raising financing for creeds, some of the challenges we faced initially was meeting up with the criteria, the documentation, because for every type of financing you're chasing, there's a different set of criteria to meet, and putting your documentation in order, making sure you meet those criteria set by each. But also in terms of working on our financial model to reflect the current situation, we've had to revise the model by quite a lot. But we've also been lucky to have quite a lot of technical assistance from various organizations in helping us put that together. So, and also understanding what type of financing to actually target at each stage. That's very important. I would leave it at that and take questions later. So.
Fantastic. Thank you very much, Hannah, for your input. Interesting description of the situation. It's like a hamster wheel. It seems like an endless cycle of trying to meet the criteria for fundraising, no matter the levels you ascend. Hopefully, we will be able to address some of those issues and how we can simplify the process for our project proponents. Hopefully through the Q&A and some further insights from our funders. Moving speedily on to our next speaker, Mr. Shaninomi Eribo, the CEO of Green Square. As an EDGE certified green building expert in Nigeria, would you say that there is an awareness really for building codes and how it can enhance access to finance? You know, what has your experience in this journey towards scaling certification for green building been like?
So thank you very much, Stella, and thank you to the organizers of this very important workshop for the opportunity to speak about green buildings here. So it's been a very, very interesting journey, so far, trying to create awareness, about the need for certification in green buildings, and also to attract the financing, to be able to develop those buildings. So the challenge has been on two fronts. One, first trying to convince developers, on the need to build green, and then also trying to convince financiers, on the need, to also finance this sort of projects. So the journey began in 2017, where I had a conversation with someone who mentioned that there was some financing in one of the West African-wide banks, who had some concessional financing to provide to proponents of green projects. And I had a client who I was working with at the time who was interested, who having lived abroad and was very exposed, saw the need, to tow this green path of development for buildings. And we made an application to the bank at the time. And I can tell you that right until this very second, we never got a response. So it's been very, very challenging. But what we do as an organization at Green Square Meter is basically provide green building advisory, investment and development services to developers of green buildings. And so we use the IFC's EDGE green building system, a standard certification system, which basically looks for savings in energy consumption, water consumption, and embodied energy in materials. So it's a bigger picture of energy efficiency. It moves beyond just the energy efficiency building codes to also embrace savings in water and embodied energy in materials. And now the EDGE building standard has been embraced by a number of entities across the world, including GRESB, which is the global ESG benchmark for real estate investments across the world, the International Capital Markets Association, which recognizes EDGE as a standard to be used in the issuance of green bonds, and also, what's the other one now? One second. There's also the Climate Bonds Initiative, which also recognizes EDGE. And so the challenges that we've had, if you move to the next slide, the challenges that we've had, Celeb, is that over time, when you look at Nigeria's NDCs, you see that there's some reference to energy efficiency, but there's no explicit reference to buildings, to green buildings. So in a sense, it's a sort of limited view, of the potential. So for instance, we know that in Nigeria, you have a 70 million housing deficits in buildings. And I think, for us, it would be a very big opportunity lost, a huge opportunity lost if we continue to develop using the same conventional standards in the face of, the urgency of climate change. Also, if you look at it from a job creation perspective, I started out my career working on building sites. Every building site, if you're building one house, there's a minimum 20 people that you need, to complete that building. And so if you look at the scale, of what needs to be done in Nigeria, you can see the potential, for job creation. So what we found is that it's not explicitly prioritized in the NDCs. If you look at the profile of projects within the green bonds issued to date, you don't see any reference to real estate projects. Meanwhile, you have tons of real estate developers, who are there, who are eager, to tow this green building path, not getting any sort of support. And so you also find that the financial services institutions do not appreciate this concept. They do not appreciate that there's actually a standard with which you can objectively measure, the performance of the building from an energy efficiency perspective, from a water efficiency perspective, and from a materials efficiency perspective, which they can actually feed into their portfolios, using the global ESG measures such as GRESB, to justify that, the portfolio is green. Another huge opportunity lost there. And of course, with real estate projects, it requires significant capital investments. And that significant capital investment requires significant collateral requirements, from banks as well. And so this is another area where developers struggle, to meet those collateral requirements. And of course, as was mentioned by previous speakers, there's also this challenge with offshore capital. So at the time, we had a partner who was willing to provide finance to developers in Nigeria, but there was that significant offshore capital risk, which sort of made a number of developers to pull back. Because what was the point of taking financing when ab initio you knew that that project was going to fail when it comes to time to repay? And so, as I mentioned when I began, this whole journey began from one experience where we were trying to access financing for a developer with funding that was supposed to be available in a bank. We were never able to access that funding, and for whatever reason, we were never told. But I think going forward, what we need is loan guarantee instruments, to sort of offset that collateral requirements for developers that explicitly cover green buildings. It has to be clear that, in this portfolio of funding, for green projects, a certain portion of it is reserved, for green buildings so that developers can access that financing. Otherwise, this will be something that's, Hannah used an analogy there about being a hamster in the wheel. The real estate sector will be the stepchild in this family that never actually, gets treated fairly. So that is what it is. So going forward, what we'd like to see is some more appreciation, on the side of financiers that, look, there's an objective standard with which, you can measure the performance of buildings. And this is recognized globally. The IFC, introduced this system. It's accepted by the ICMA, it's accepted by GRESB, it's accepted by, other entities around the world. So I think this is really this is really the meat of the matter. Just being able to appreciate that there's that opportunity there, for reducing CO2 emissions, for creating jobs, and for meeting those climate change targets. So I'll yield at this point and take questions later.
Thank you very much, Shani. Very enlightening there. In the green real estate space, I think I'd summarize, if I listened thoroughly, I'd summarize the challenges you raised as finance, local and offshore, pertaining to the structure of financing, and you also proposed some resolution to that, and then regulation as well. Policy that enables and that supports and promotes green building to meet up with international standards. So thank you very much for your contribution. Moving quickly on now to Mr. Wale Adebi, CEO of Recyclers. The circular economy has been promoted as one of the most important ways to create jobs in the informal sector. Would you say that Recyclers' waste to wealth project has more avenues to expand? What are the strategies towards scaling your business model? And how can the collection of waste materials be improved to the extent that waste collection is incentivized? You're welcome.
Thank you very much. Thank you very much, Sele. I don't know if you can hear me clearly.
Crystal clear.
It's a pleasure to be here, and looking forward to really sharing my thoughts today. I just want to quickly go into the background about Recyclers. So Recyclers is a social enterprise. It's for profit, and really our focus is to allow communities, primarily in low-income areas, capture value from their waste. And I'm going to really focus on talking about value here, because I think that's really the key in terms of successful waste management operation. A lot of things have been spoken about regarding, how do we access financing, and how do we actually grow businesses? When it comes to the circular economy, particularly with the space that Recyclers operates, it really ties down to the value. It's really in a nascent stage. So we have a lot of situations whereby there's a lot of behavior change that needs to take place. There still needs to be a lot of infrastructure around waste collection that needs to be put in place. So there's a significant cost both from behavior change and actually physical waste management. A lot of states across Nigeria don't actually have any structured waste management. So that's where it begins. And in order for us to actually make this sector successful, we actually have to be able to extract value from the waste. Because as we collect this waste and we process it and add value, we have to make sure that there are off-takers that will be allowing us to take this material and add more value to it to allow us to transfer the incentives that you mentioned. And I think in one of the earlier presentations, talking about what's the different timelines around getting capital. And I think in terms of waste management, we're still in the very early stage regarding collecting grants or equity from angel investors, because we have to really establish a structure to build upon. But what we're seeing today, particularly with regards to circular economy, is that there is a larger increase, or I'll say an uptick in terms of the number of off-takers that are willing to collect not just recyclable material, but even organic material that goes into waste to energy facilities that can actually generate electricity. So what we're seeing is that there is an offtake demand that can allow these types of projects to be bankable. And so the goal for us now is to try to work with, I would say, the private sector to create a structure to allow us to transfer the waste, or I would say the value, from individuals all the way down the value chain. So I would say the key thing for recyclers, particularly with regards to growth, is to find ways to work with private sector to further incentivize the waste collection and then increase the value of the material that we collect. Primarily, our strategy really focuses around increasing our collection base, and we are focusing on incentives, providing incentives to recycle. But we also really focus on adding value to what we collect. The more value we add, the more we can actually transfer that value to the individuals that collect, which can impact them both from an environmental perspective and also from a social perspective with regards to incomes. So Recyclers really focuses on that key thing, which is value. We think that if we want to access more finance, we have to really create a better story. We have to create a situation whereby investors really feel excited about the space. And I think the key way to do that is to provide key incentives by increasing the value of the material that we collect. And I'll hand it over now, and if there's any questions further, I'll be happy to answer.
Thanks, Wale. That was very informative. In a country with a population of 200 million people, you definitely need a structured waste management, collection, and processing system for this to work. So looking forward to seeing how we can work towards this, make this happen. Time is against us, and I'm hoping that we will have some time to get a few more questions in. But very quickly to our last speaker, Mr. Ikechukwu Ufoeze, thank you for your patience, the CEO of Prime Commercial Farms. If you could give us an overview, some background around your business to date, and then discuss how your business model you think improves access to finance. What has been your experience in developing your business and accessing the relevant finance to grow your business in this space? Over to you. You're on mute at the moment.
Thank you very much. My company is a Prime Commercial Farm. We are currently operating a farm in Anambra State, and we seek funding for a new project we are carrying out in Enugu State, in Ozo-1, in local government area. The project is a 560 million agricultural project. So far, we have spent 181 million, and we are looking for support for the balance of 373 million. The current money spent was on land acquisition, land development, and farm equipment. The additional 373 required will be used for development of 200 hectares planting of economic trees, provision of renewable energy, and the operation of a total of 300-hectare farm in a climate-smart manner. We are incorporating tree crops, which they help in the CO2 emission. The tree crops will require an initial 4 years to reach maturity, during which there will be no cash inflow. However, the net profits from the sale of the cash crops in the year 1 and subsequent years will help to run the project. But the challenge you'll be having in terms of is finance. Finance has been a major issue, long-term financing, because Nigerian banks and institutions are not very used to lending for long-term. Also, another issue we have is cost of financing is a major issue. So PCF, we are seeking to assemble a combination of long-term climate funds to address this issue. We are hoping to speak with the Rural Electrification Board and the International Climate Finance. So these are the possible sources we are looking to discuss with to help improve the finance. So this is part of the reason we are now talking, we're in this forum and in other places to help raise the finance. But most businesses in Nigeria starting up, because most lenders are used to lending for quick short-term finance, which is what the Nigerian banks are specializing. So we are grateful for the CFA and other institutions that are putting up things to help green finance and green and funding for long-term projects. A farm like us is called like an adaptation project, which is is helping to adapt to the challenges of the climate change. So during the panel, I'll take more questions, and if there's anything I can help clarify it. Thank you. Hello.
Yes, thank you very much. Thank you very much, Mr. Ikechukwu, for your contribution. Clearly, there is a need for additional funding, for significant funding to grow and to boost your business. So with that now, we will try and take in a few questions. There were quite a few questions that came in. We'll see how many of those we can take quickly and address to the panel. Various questions coming in about funding. I guess some of these are questions for Olumide and team. How can you attract private foreign investors to provide green financing to Nigeria? We want another question. We want to, and maybe the team can take these at the same time. We want to seek sustainable funding with long tenor for our clients. This is a waste to electricity company. How do they go about accessing this sort of funding? The capex that they sort of estimate is 5 to 20 million. So perhaps Olumide, you might want to weigh in on this, and also maybe a question for the AFC. I don't know if Olumide is still on the call, or Dr. Uzo, if you're on the call as well. Perhaps you might want to speak.
Yes, thank you very much, Sele. So listening to all the presenters, we thank you very much for your presentations and your interventions and your questions. But I think the bottom line is clear. The access to finance, which is really why the CFA was set up, access to finance is tough. And there are many reasons and many barriers in accessing finance. But if we can look at just a general overview, I think that on the side of the project proponents, the bankability of your project is critical. It is not just about putting down a project or having a concept. You really need to look at what the banking sector wants. And I say the banking sector because that is the bigger hurdle to cross. If you take the bankability criteria that the banking sector has, and I think many of the banks share this, but we can't share it after this workshop because there's a list of criteria that the banking sector looks at. It covers things like, what are your project objectives? How are you going to be profitable? When are you going to have returns on investment? What is your internal returns of rate? These are things that you have to calculate, and you have to show and demonstrate that your project is bankable. Your project will be profitable, even if it is a social project. Now, on the other hand, when you're presenting to the banks and to the DFIs in this case, there is a reason why we have a number of DFIs here, and that is because DFIs have been kinder, so to speak, more easier to access than banks, because DFIs understand the challenge, some of the challenges that the project proponents have, and they try to bring in things like technical assistance, because if you want to develop a project, there are some aspects of it that you need support for. This is where the DFIs come from, give you technical assistance, provide grants, but at the end of the day, that project still has to respond to the bankability. And that's where the last speaker, Ikechukwu Ofueze, needs to look at these issues very critically. If you're going to go to IFC or the other group you mentioned, they look at the bottom line. While you have to meet the climate aspect, the climate intervention that you want to have in your project has to be able to pay back the funding that it is seeking, and it has to be profitable. It has to be inclusive. So there are a number of issues that we are seeing emerging from the gaps that we find on the project proponent side. But then again, on the DFI side, there's a lot of interventions now. Ijeoma Zulumba spoke about what they are doing from DBN, where they now even have an impact guarantee fund to help de-risk projects. But before you can even get to the point where you are considered, you're qualified to receive some de-risking assistance, your project has to pass all the bankability criteria. And the challenge is like what Hannah said, it's like running a wheel, reapplying and applying and applying to different DFIs along the value chain, responding to different requests, different protocols. It's extremely challenging for the proponent. So my advice to the proponent would be, when you understand where your project sits, the project that you have, then you identify who best can support it. Not every DFI can support any project. And I think the CFA has come up with a list that is not available at this time, but it will be by the next workshop that's going to come up, where there's a list of DFIs that respond to certain kind of projects. So sometimes you might be knocking on the wrong door. The DFIs have increasingly understood some of the challenges of responding to climate finance, and they're willing to help. But you have to plug your project to the correct one. And there's a myriad of challenges out there, like the one mentioned by the AFC for funding very large-scale projects. Those kind of projects require yet another set of critical thinking about how best to overcome the policy challenges facing it. And these are, some of the things that the CFA is trying to put together. And this workshop is about distilling ideas from the floor and then taking that back to refine and fine-tune what we can give back to you. So we don't have all the answers right now, But what I can say to you is that we're crystallizing those answers. And the idea is that it enables you to sharpen your project requests. It enables the DFIs to be able to see how they can work with you. And it enables you to cut down the time wasted. So the framework exercise that REA spoke about is something that this CFA, I think, intends to do within the space of its interventions to support a development of a framework where you can easily see where you fit in, and then you can see who can help you, who can support you, and who can intervene for you. That is what the CFA process is about. I think I can rest here. Sally, over to you.
Thank you very much, Uzo. That was very, very comprehensive, and I think it covered those two questions I asked and a few others. Again, because of time, I will move now to some rapid fire questions directed specifically at certain, I think most of the project proponents here. Please keep your answers very short, succinct. So to Bankole, there's a question here very quickly. How does one join the NCIC as a green startup? Bankole, if you are speaking, you are on mute. Okay, moving on quickly to Wale. There's a question here, a very specific question. Do you carry out recycling processes on tires? Recycling, not reuse.
No, we don't do tires.
Okay.
We focus on primarily household recyclables, so plastic bottles, cans, paper, cardboard, things I find generally in the household.
Great, thank you for that, Emmanuel. I hope you you heard that response. There's an anonymous question here to Ms. Sadia and Ms. Kabir for both your businesses. How best can your businesses help reduce our fuel and diesel costs at a factory, given that some of the equipment are heavy? I think this is a direct question. You didn't leave your name, so maybe you can send a message to NESG, and we will get that question, get your details, and then maybe put you in touch with both Ms. Sadia and Ms. Kabir, so that you can discuss your business needs a bit more. So a question here for Shani. What efforts is Green Square Meter taking to ensure that the aspect of green building is reflected in Nigeria's NDC?
Thank you very much for that, Sele, and to the person asked the question. So what we've been doing, so we actually paid a number of visits to the Ministry of Environment to basically advocacy, trying to increase awareness that this was something that didn't need to be overlooked. Because, for instance, when you look at the EDGE certification system, incorporating solar energy, into your energy mix within the building, is actually one measure that you can select, in order to qualify for the certification. And so it actually provides the opportunities, for solar power, projects. So people who provide energy as a service, it provides an opportunity for them to collaborate with property developers. So we've been trying to make this clear, to the Ministry of Environment, because when I heard about the green bonds issuance and I looked at it and I saw that there was no provision, for buildings, for construction, for homes, when we have this huge housing deficit, I was quite shocked, so I actually took it upon myself to go to the Ministry of Environment. I met with the PA at the time, and he was trying to tell me, that he was trying to find a way to set up a meeting, so that I could make a presentation about this. So we're still continuing that effort. It's basically through advocacy, attending events like this, trying to raise the profile of green buildings, trying to increase the awareness, about it, to funders, to DFIs, to the people who advise governments, on policy, so that they can be aware, and then, hopefully, I guess maybe because, I wasn't even aware, when they did this, the last updates down to the NDCs. And if I'd been aware, I'll have tried to make a representation, to try to make sure that it was sort of included, on this round. But we'll keep doing it. It's purely through advocacy, attending events like this, writing about it in the papers, speaking to experts, advisors to the government, to try to get it onto the agenda.
Great. Thank you, Shani, for your response. Thank you, Emmanuel Achaf, for the question. And maybe just one last question now. Uzo, this might be a question again for CFA, or unless any other speaker wants to contribute to this. A question around, from Olawale Rashid. Abuja Chamber of Commerce and Industry is launching a chamber carbon project on 28th October designed to reduce business carbon footprint through the adoption of energy efficient and green power technologies. Are there any bodies, institutions that can collaborate with the chamber to either fund or run these initiatives?
So that's a broad question. You see, the thing about climate finance is that it's not very clear who is in the space. My suggestion would be to the person who posed the question to try and identify who the participants are. In the Nigerian government, there is an evolving climate finance policy that is going to also identify various actors in that space. The CFA is also working on something similar, and I can see that Guy Harrison has put on his camera. And, he would like to speak to us more on that.
Guy, please, the floor is yours.
Please.
Thanks very much. I think it would be good. I'm very happy to follow up with the Abuja Chamber directly after this meeting. What I was thinking of is that this may be an area where there's a UK private sector solution, or maybe some partnership opportunities that we could involve if the 28th of October meeting is going to be sort of either online or sort of hybrid, face-to-face and online. There are certainly, I think, some we're keen to look at bringing in more private sector investment. I have colleagues who work with the Department for International Trade, that's the UK's export and outward investment body. And I think we'd welcome a chance maybe to understand a bit more about what the aims of that October event are, and to see whether we can introduce maybe some practitioners or some investors whom we could bring in for that. Hope that makes sense, and very happy to follow up. And I can provide, I think Uzo and others have my contact details anyway. Over.
Thank you very much, Guy, and thanks, Uzo, for your earlier contribution. At this point, we will have to wrap it up here, the Q&A, as we have gone beyond time. But thank you so much for your participation. To the audience, perhaps there will be an offline channel to have additional questions, further questions responded to. So at this point now, I will hand over to Nick again, just to highlight the next steps for CFA Nigeria before we wrap up. Nick?
Thank you, Sele. I can be brief here. I spoke about this earlier. As you can see on the screen now, we're in the middle of our design of the CFA and how it's going to serve the different market actors, some of whom are represented on this in this meeting, in this workshop. So coming now, we'd like to speak to everyone again. We'll be designing the process. We'll be making progress around COP26, and we will be having a series of pilot investments seeking to connect projects to finance over the course of the Q3, Q4 this year. with a final launch of the CFA come 2022. So I think it's going to be a continuation of the kind of discussion we've been having today, understanding how to connect to finance, understanding the particular requests of project developers and the means of support and the part played by those crucial DFIs, sponsors, incubators. So with that, I will conclude and pass over to Dr. Burr for the concluding remarks.
All right, thank you very much. Can everybody hear me?
Yes, we can hear you, Crystal.
All right, great. So congrats to the UK government, Adam Smith and NESG for this great initiative. As we've all seen, lots of work has already gone into this, and so we look forward to the full operationalization of the CFA here in Nigeria in 2022. As we heard at the beginning from Guy Harrison, Nigeria's NDC is ambitious and requires $170 billion to deliver. That's roughly 1/3 of Nigeria's entire GDP. Next to that, the cost to fix the power sector is another 200 billion. Obviously, there's some overlap, but the funding gaps that we're all operating with here are just absolutely massive. So there are a growing number of players in this space. There's donors, there's investors, and there's most importantly entrepreneurs, many of whom we heard from today, working tirelessly, not only to close the energy access gap like All On is doing, but also to deliver on Nigeria's climate commitments through the circular economy, green buildings, climate smart agriculture, and so much more. And as we've seen today, the way that we're all addressing this is in a very collaborative way. In this sector, you already see there's a lot of partnerships already happening. REA and DBN that partnership was talked about today. The AFC, who was represented here, is doing stuff on power and green energy with the NSIA. All On works with the African Development Bank, REA, everyone else. So we therefore welcome this great initiative to add to these building blocks already in place. There are billions of dollars for climate finance waiting on the sidelines to support Nigeria's transition, green transition. And if the Climate Finance Accelerator can help unlock this finance in a way that has not been done before, it will contribute enormously to scaling the great work all of us have been doing and many, many others are doing, so that we can really, really move the entire green sector forward in a meaningful way. So to the team at CFA, thank you very much. We're all here to help. Together, we can deliver on Nigeria's climate commitments, the energy transition, create hundreds of thousands of jobs in the meantime, close the energy access gap, and improve the social and economic reality of millions of Nigerians. So a lot is at stake if we get this right. So let's all work together and make it happen. So thank you all again today for joining. This is, I think, the first of many conversations like this that we have to have. Thanks everyone for the participation, for the great speakers, and we look forward to next steps and working together to make this all happen. Thank you. So Sally, I think you can close it.
Well, thank you again to all our panelists, to the speakers for your insights into the issues, the barriers, and the opportunities. It's clear that there's a lot of work to be done. Thank you to the organizers of the event, NESG, UK government, and the ASI. And importantly, thank you to our participants and our attendees for being a part of this program. As my boss has said, looking forward to continuing this conversation and achieving a greener Nigeria. Thank you and have a good day.
Thank you.